What is going on, everybody? Today I'm going to quickly talk about one way I look for liquidity in the market. And this is a big part in my training and how I was taught to trade. So, and someone on my Instagram asked me how I map out my liquidity and what I'm looking for on a day-to-day basis. And this is one of the forms, which is structural liquidity. So, let's say this is our range here on the 4-hour. We had a sweep on buy side liquidity. We had to break a structure down. This is our range, okay? Anything above the high is external. Anything below the low is external. But everything inside on the lower time frames. So if I'm looking at a 4-hour trading range, I'm going to typically be looking for 1-hour internal liquidity. And that's going to be these highs and lows within the larger range. So we have a high here, we have a high here, and a high here. These are all internal points of liquidity within the larger trading range. Okay. And this can also take place on the 4-hour. Let's say our 4-hour range looks like this. And the reason I would not consider this to be our structural high is because this didn't sweep anything. This didn't create a strong high in the market. So the market can likely take out this high, take liquidity, create a new strong high, and then continue down. So that's another thing I'm looking for. I'm looking to see if these internal highs have swept liquidity on the same time frame as the structural range. And this is where a lot of people get caught up. They think we've broken structure, but really we were just creating a new strong high in the market. All right. So back to this example here. We have our 4-hour trading range. It is bearish. Our expectational move is to continue down and create a new lower low. So what I'm looking for is sweeps on buy side liquidity, because if we want to sell, we want to be selling within buy side liquidity. Okay. So this would be our liquidity pool. And so these are the points in the market that I'm looking at that are sponsoring points of interest, of course. So we have a 1-hour hidden base that is sponsored by liquidity. So I want to see an aggressive run on buy side liquidity, a mitigation of a point of interest before continuing down. Okay. If this did not hold, if let's say something like this happened and we started ranging in here and then we got a new injection the next day, I would be looking for trades above these highs. Okay. And let's say we have a 1-hour point of interest right here. We have a BPR. So this is our next point of interest that's sponsored by buy side liquidity. That's within this trading range. Okay. So that's how I'm mapping out liquidity. And let's just say for whatever reason we sweep this high. We can look at the larger time frames. Let's say the daily. And the daily, there's no points of interest here, so I wouldn't be interested. I would think that maybe potentially we could look at this point of interest right here that's sponsored by all this internal liquidity. Let's say of this range. Or potentially sweep out all these highs and then maybe just continue up from here. Really all I'm looking for is lower time frame internal liquidity of the larger ranges. Let's take like a much larger range here. We have a bullish range here. We had a sweep on lows, break and structure. This is our larger bullish range here, and the only point of internal liquidity I see is right here. So we could potentially sweep this low before continuing up on a macro scale. And I believe we did. Yep, we took this low, and that was anticipated. I hope that helps. Once again, just to recap, I'm trying to find my higher time frame ranges. So let's say like the weekly, daily, 4-hour. And then in respect to that larger range, I'm looking for lower time frame structural liquidity that is internal of the range. And these are points I'm looking for that are sponsoring points of interest. Okay. And after that, I'm just looking for an aggressive run on either buy side or sell side liquidity, depending on if we're going up or down. Hope that helps. I will see you guys in the next.